just on Futuregen's. They just had they released their month end for August returns. So Futuregen Australia for August was up 6.3% versus the All Ords up 3.7%. So on a 12-month basis, Futuregen Australia has done 5.3% positive versus the All Ords at negative 3.5%.
What's been the difference with that? Is it just the fund managers are a bit better to that the space, or?
Yeah, so I've always said because 43% of the portfolio is long only, and then the rest of it is either market neutral or long short. And so really my theory has always been that it should outperform in any market other than a strongly rising market. And I think that's what we saw. So 2018, 19, when markets were really strong, they were struggling to keep up with the market. And since then, performance has turned on its head. So the market's really struggled and FGX is absolutely fired. So I think it does just validate that sort of more diversified strategy. But the frustrating thing is obviously the share price in the short term deviates. So, people don't necessarily understand the underlying resilience, but it's certainly working. And global was up 3.4% for August, and the MSCI All World Index was up 2.6%. So global over the last 12 months is up 12%, and the global benchmark is up 6%. So, I mean, they're phenomenal numbers.
Yeah.
And so that puts the NTA of global at 155 versus the share price of 130. So it's about a 16% discount. And it puts FGX NTA at $1.25 versus a share price of about 110, 111. So that's about a 10% discount. So anyway, they're both working well.
What about with, I suppose we'll talk about this in a second, maybe we'll try and frame it so it's easy for Jay to edit up, but about MFF Capital, how they've obviously got a lot in cash in the fund, which has naturally held them back a bit. What's the general thoughts there?
Yeah, so, I, as you know, I'm a massive fan. Would it help if I just bring up the current portfolio?
Yep.
Can you see that?
Yep.
Yes. Yeah. Great. So this is current portfolio. So you can see about 36% of the portfolio in Visa and MasterCard, and then Home Depot. So that takes you to nearly half of the portfolio in basically two investments. You can also see a little bit of Berkshire starting to creep in there as well. But that's basically half of the portfolio there. And then the other 38% of it is currently sitting basically in US dollar cash. So it's obviously high conviction. As you know, I am a huge fan of this guy's ability to compound returns over the long term, and he's had phenomenal performance over the last 10 years. But he essentially has got COVID wrong to date in that he was fully invested going into COVID, and then he started selling out, started building up those cash levels through sort of April, May and June. And so the portfolio hasn't participated as much in the rally. So I still feel very comfortable with that. His cash level did get to about 50%, and now it's down to about 38%. So he's been sort of slowly deploying that, and some of that's gone into Berkshire Hathaway and Microsoft. my view on it is, obviously we own this thing from a very long-term perspective, and whether he gets the short-term direction of the market right or wrong right now is not overly relevant to me. I'm very confident that over the long term, he will deploy that cash sensibly in some shape or form. So, how I think about it is if the market pulls back, then he's got lots of cash there that he will be able to take advantage of opportunities. On the other side of it, if the market sort of roars away, then it's likely that he's going to underperform in the short term. But again, if that happens, the share price is probably weaker in the short term, and that gives us an opportunity to accumulate more of it.
Perfect. Jay, do we want to do like a 1 minute sort of cut just to the
email,
the bonus share offer?
Let me just explain that. So essentially, shareholders of MFF have been given options in MFF for free. So I think it was a 1 for 5, 1 for 4. But that has obviously cost shareholders nothing. That option gives shareholders the ability to buy more MFF at any stage in the future by paying an extra $2.60 per share up until October 2022. So basically, my thinking with this is that we will leave that small option position sitting on accounts, and then when we get closer to the expiry date in October 2022, assuming that the share price is greater than $2.60, we will most likely look to exercise that option to increase the exposure to MFF at that point.
Yeah. So basically, we don't need to do anything immediately. We just sort of sit and watch, and they sit there until we choose to act on them, basically. I suppose people would see that extra line in their portfolio, which will show the options sitting there. That's probably the only thing.
That's it. And just be aware that option price will be volatile, because if MFF goes from $2.60 to $3, that option price probably goes from sort of being worth 25 cents to being sort of more like 65 cents, something like that. So that option price will sort of move around a lot in the short term.
Yeah. Perfect. The other one I had, which I sent through yesterday, was about Macquarie, which was just a client question on, obviously they reported their earnings and they dropped back a bit, but
yeah,
if there's any huge long-term concerns there?
Yeah, so I think headline number was big in terms of what the reduction in earnings for the next 2 halves will be. So the headline fall in profits looks big, but the market was already anticipating that. So net, there was the guidance that they gave was about 10% lower than what the market was expecting. So it was a bit of a negative, but not as sort of negative as what the headline number looked like. And in simple terms, Macquarie was making lots of money in the first half because a lot of businesses were needing to raise capital, and Macquarie was sort of involved in those capital raisings and making huge fees from doing that. As well as that, the volatility enabled them to make trading profits. And as that's now sort of starting to settle down, they're not getting that sort of big tailwind, and that's why I think profits are sort of coming off for sort of the next half. But it doesn't change the long-term thesis that Macquarie, is a really strong franchise that should be able to generate, good returns on equity over the long term.